Anytime you print money, you get inflation. So we'll see what happens. That's got to go through the gauntlet in Washington. That's one factor. The other that's really interesting that has a lot of market watchers really scratching their heads right now, because it's never happened before. You've got a situation of full employment, that's like 3.4%, and yet at the same time a second quarter of GDP shrinking. That has never happened before. So one way to interpret that is to say the productivity of the 2+ million new workers that have just been booked into the economy must be very, very low. Or maybe they're not really working 8 hours. Maybe they're working less, but there's something not working to the traditional model, which is why I think it's giving Powell pause, because he has been job-owning a more dovish Fed, having just done the 75 basis points. Even he doesn't know what's happening here, so he's data dependent. We've never seen this before. Never in the history of the economy in 200+ years has this ever occurred.
Inflation is arguably one of the biggest economic challenges in the U.S. right now, but not everyone can agree on what led to the major shift. Some economists have blamed the Federal Reserve's policies, others have attributed it to supply chain woes, but according to venture capitalist and Shark Tank host Kevin Oleary, and it's bigger than that, especially as the Biden administration gears up to pass the Inflation Reduction Act. The way to think about it is there's not going to be a lot of relief on inflation, because if we pump another $600 billion of free cash, which is basically what Build Back Better is, into the market after putting $6 trillion of free money in, there's a reason we have inflation. Oleary said on a recent interview, "We just print too much money." From gas prices to grocery stores, inflation is hitting Americans where it hurts, their wallets. In March, the price of consumer goods was up 1.2% since February and 8.5% year over year, according to the Labor Department's most recent data. It seems like anywhere you look, your dollar isn't going as far as it. The most important thing Americans can do with their money during a period of high inflation is to avoid keeping the bulk of it in a low-interest savings account. Right now in a bank account, you're getting very little interest, Oleary says, and inflation is over 6%. So you're actually losing money every 12 months. In other words, if your bank account is giving you 0.01% interest each month, but inflation is at 6%, the value of your money actually decreases by 5.99% over that time frame. Welcome back to Savvy Finance. A big thank you to all our viewers and subscribers. We really appreciate your support so much in these difficult times. Thanks for watching our videos. Let's listen to Kevin Oleary.
Well, the narrative towards the soft landing has changed so much in the last 8 weeks, because just 2 months ago, nobody thought Powell could engineer anything like this. And here we are. It's very hard to call this a recession when you've got full employment. And so is this working? So at least 50% of the pundits or the market now believes a soft landing is possible. And again, a lesson learned for everybody that thinks they can time the market is, look what happened in July. You've got maybe half of this year's returns came in 4 days. And so if you weren't in the market, you didn't capture that upside, and so it's impossible to time the market. You would have never guessed July would have been a good month, but it was. Well, the truth is in the earnings, and so far everybody was waiting to see earnings completely blow up. Didn't happen. Many companies delivered, even the highly speculative tech companies, and we're more than halfway through earnings season, and it looks pretty good. Now, it's not as good as it was a year ago, but it's nowhere near as bad as everybody was forecasting, that we would be in the height of a recession right now, and we're not. And so this is a very difficult time to make a decision between fixed income and equities, because as you mentioned earlier in the show, we've got an inverted yield curve that's generally never good. But again, when you can't tell me why we have full employment, 2.5 million more people working, and low productivity, then maybe you want to be a little careful about making more decisions about raising rates or changing policy or raising taxes. They all sound like really bad ideas until you've really figured out the riddle of what's going on in this economy. We don't know. So my attitude is to stay long equities, continue at a 30% weighting in fixed income. That's very low for me. Usually it's 50%. And just wait and see what happens. My names are high-quality names that provide cash flow and distributions. But it doesn't matter what sector you pick. You've been doing quite well in the last 4 weeks. So the question is now, what's next? Many people think, well, another one is going to be at 1%. Maybe there'll be an emergency meeting. But I don't think so. He's in the same boat as everybody else, trying to figure out, where are we in this recession? Is it going to be maybe 2 or 3 quarters of slower growth or no growth? We haven't really called it yet because it's so perplexing to have this much employment. For every job, out there in America that is available, there's a ton of people that don't want it. I mean, you can't hire anybody anymore, which is incredible. And, minimum wages in California, $15 for service providers, maybe in the food industry. You can't get any at $15, 21, 22, 23 right now. So the economy is self-adjusting. There is a ton of people that just don't seem to want to go back to work.
A recession is top of mind for many Americans. But how do we know if we're in one? Technically, the country is in a recession when gross domestic product, the value of all goods and services produced during a specific period, falls during 2 quarters back-to-back. Last results by the Fed proved this was the case. GDP dropped by 1.6% in Q1 and 0.9% in Q2, according to the advanced estimate by the Bureau of Economic Analysis. IRA allow you to save for retirement in a tax-advantaged way for greater financial security with lots of tax advantages. But most IRA offer the same boring stocks and bonds. Introducing iTrust Capital, the #1 crypto IRA platform in America. iTrust Capital allows cryptocurrency investors like you to enjoy all the exciting benefits of tax-advantaged retirement accounts. It combines the traditional IRA with the new, exciting world of cryptocurrencies. Why should you use iTrust Capital? It is the best crypto retirement platform in America, with some of the lowest fees of any cryptocurrency IRA platform. It gives investors adequate exposure to some of the top cryptocurrencies like Bitcoin, Ethereum, Cardano, Solana, and Polkadot. You can buy and sell all your favorite crypto assets while enjoying amazing tax-free gains. It is adequately secured by Coinbase custody with a $320 million insurance to protect against theft. You can easily roll over an existing retirement account or begin a new one when you register on iTrust Capital. iTrust Capital is the trusted crypto IRA for many American investors who love the crypto industry. To join the millions of Americans who use the platform, please click on the link in the description box below. While all signs point to a recession in the U.S., this is determined by the National Bureau of Economic Research, and it has not called a recession yet. But whether we can call this period a recession or not feels like a game of semantics. Ultimately, everyday Americans are struggling as prices continue to soar, the cost of borrowing rises, and layoffs increase across the country. In the Great Recession, unemployment peaked at 10%, and it took an average of 8 to 9 months for those out of work to secure a new job. So now could be the time to review your emergency fund if you think there's a shortfall. If you won't be able to cover a minimum of 6 to 9 months' worth of expenses, which is hard for most people, see if you can accelerate savings by cutting back on spending or generating extra money. It's also a good time to make sure your resume is up to date and to establish contact with influential individuals in your professional and personal network. If you are laid off, make sure to apply for unemployment benefits right away and secure your health insurance. If you're self-employed and worried about a possible downturn in your industry or a loss of clients, explore new revenue streams. Aim to bulk up your cash reserves as well. Again, if previous recessions taught us anything, that having cash unlocks choices and leads to more control in a challenging time. Whatever you do, never give up to hopelessness. Keep pushing and keep being positive, and you will definitely make a way for yourself and for those you care about. Thanks for watching. Till our next video, please stay savvy.